Walker here at NASDAQ Market Site with a Financial Buzz exclusive interview. Alongside me today is Mike Pruitt, CEO of Chanticleer Holdings. Welcome, Mike.
Thanks for having me. Looking forward to it.
Why don't you tell us a little bit about your company?
Chanticleer Holdings is publicly traded on NASDAQ under our symbol HOTR. We are in the restaurant space where we have restaurants all over the world, led by the iconic Hooters brand, where we have a stake in Hooters, as well as I sit on the board of Hooters, and we're an international franchisee for Hooters. But we've recently expanded into the Better Burger category, where we acquired American Roadside Burgers a year and a half ago, and then announced a major acquisition of BGR, the burger joint based in DC. And then we also have a concept called Just Fresh.
So you primarily you're a franchisor or franchisee?
So in the case of Hooters, we do own part of the franchisor as a minority stake, and again, I sit on the board of. But we're also an international franchisee for Hooters, where we have stores in South Africa, in Australia, in Budapest, in the UK, and then recently we expanded by buying 2 Hooters in the US up in the Pacific Northwest, one in Tacoma, Washington, and one right outside of Portland.
Sounds like you've been expanding fast with a lot of growth. What are some problems you've been having?
Well, I think so much in that we are really looking forward to get scale, to justify being public, the cost of being public. And the only other area I think that we've struggled with at times is the market being aware of what we're accomplishing it when we accomplish it. And so we've been fortunate to acquire some opportunities at very attractive multiples, as well as organically grow through opening new stores. But really, those are the challenges, just really getting to the scale to support the public cost.
Right now, are you emphasizing domestic growth, international growth, or a blend?
A blend. I mean, our tagline is taking America abroad, led by the iconic Hooters brand that gave us the opportunity to create a platform internationally. So with the case of the burger joint, which we just bought, those stores are mainly domestic in the U.S. However, they just signed a franchise agreement in the Middle East. So with the first store just recently opening in Kuwait. So they also are international, and then we look forward to taking that brand international and taking advantage of the platform that we've created.
Well, tell me a little more about the burger joint. Why was that so appealing to you?
It allowed us to get into the franchising business. Our intention when we bought American Roadside Burger was to get into franchising, but the acquisition of BGR, the burger joint, allowed us overnight to be in the business where they've already created this platform. They have a successful brand, a brand that people wanted to franchise, where there's 11 units open today, but more importantly, there's 80 more units under development agreements to be opened over the next 5 years. So that, to us, is a game changer in terms of allowing us to grow with not having to always dilute our equity by raising capital by doing a purely organic growth model.
I believe you're very interested, you call it the Better Burger space, is that what you call it?
That's what the market has called it, the Better Burger category.
The Better Burger category.
Right.
Do you feel this has higher growth potential than other restaurant type chains right now?
Well, look, the fact is that in the Better Burger category, there's been some recent, very successful transactions with Shake Shack and Habit Burger going public. It is a category that's growing quickly, both domestically and then even more so, and going back to taking America abroad, what are we known for? We are known for having a great burger. And so, we think that taking this, opportunity international, is going to fit perfectly in the growth model that we have.
You mentioned Shake Shack. That was met with a lot of enthusiasm. Is that something you hope to get as well?
Oh, absolutely. And look, the fact is we have gotten some notoriety with the acquisition of BGR, the burger joint, because it's often mentioned in the same breath with the likes of Shake Shack and Habit Burger in terms of successful burger, concepts, out there.
Tell me a little more about your European operations. You just appointed a new VP of operations.
Yes, so we recently added Brian O'Connell to our team. He's based in London. Given the success that we've had with the Hooters store in Nottingham, England, and our future expansion plans in the UK, Brian's a valuable addition to the team. Brian's background is more the capital markets side. And so I'm a big believer in giving our customers who may want to have an opportunity to own part of the brand that they enjoy, making it easy for them. And Brian being based in London and the success we've had in the UK and the expansion in the UK, Brian's going to be, very integral in helping us, address the European markets from a capital perspective.
Do you want to go into a little bit more about what your goals are in Europe for this year?
So, we're currently Alex Hemingway, who runs, our European, Eastern European operations based in Budapest. Alex will head up our franchise development efforts for BGR, the burger joint, throughout Europe and the Middle East. And Brian will also look to pair capital with those potential franchisees. So we see Europe as a big growth place for BGR, the burger joint. And again, we look to open some additional locations for Hooters in the UK, given the success that we've had with the Hooters in Nottingham. Just to put that in perspective, the Nottingham Hooters last year came in third in terms of sales from an international Hooters location with over 100 locations. So it's done very well.
How about Asia? Do you have plans to get into Asia at all?
We've had some conversations in Asia with BGR, the burger joint. They've had it, and then we've also had some. So yes, we do see Asia as a growth potential and an opportunity for BGR, the burger joint.
What about the United States? What are your plans here?
Well, currently, half of those 80 franchise stores to be opened by BGR is in the U.S.
Okay.
So they have plenty of growth opportunity there. We are looking as well to potentially, sign up new franchisees. We've had some people that we know that have expressed interest. As it relates to Just Fresh, our current plans are to open a couple more of those stores in the U.S. this year, and then look to franchise it in 2016.
For Just Fresh, when you say franchise it, do you mean abroad or in the U.S.? Or both?
Both, yes.
Okay, so you really want to take everything here and export it.
Exactly.
Okay, you don't. So when you're looking for markets, for restaurants, for chains, you're looking for an idea that will work well overseas, not just here.
Yeah, we wouldn't buy a concept that we didn't think it could work overseas and was a franchise opportunity. So as we look to grow, we look for accretive acquisitions, in the Better Burger category, in Just Fresh's category, or potentially Hooters, additional Hooters locations. Mm-hmm. But if we were to look at a new concept, it would have to be a concept that we thought could work internationally, and a concept that we thought could be franchised.
Do you intend to continue growing Hooters?
Oh, absolutely. We have contractual obligations to Hooters to open additional locations in South Africa, in Australia, and soon to be in the UK. And so, Hooters is what put us in and gave us this opportunity in terms of the platform. And so we definitely intend to keep it from an international markets growing. And we wouldn't be opposed if the opportunity presented itself to make an acquisition in the franchise network as well. But from we're really looking to franchise, and BGR, the burger joint, provides us that opportunity. And Nate Ripley, who's the president of operations there, Ed Kelly, and Debbie Bonin, they've done an amazing job in building this brand to this point, and we look forward to working with them and giving them the resources and exposing them to our platform to help them grow.
Big picture, where do you see the company, say, in 5 years?
Well, the good news is, and I think that we've gone in 4 quarters from $3 million in revenue to $9.1 million in revenue. So we've definitely had explosive growth, and we're only getting started. So we do think that the opportunity with the acquisition that we've mentioned of BGR, the burger joint, but we also have mentioned we have another acquisition in the burger category that's under LOI that we hope now that our rights offering, which was just completed, is done, that we can get that closed as well. And so, between those 2 acquisitions, a couple of Hooters, we have Townsville, Australia scheduled to open. We own land and building in Port Elizabeth, South Africa, which we intend to open. We have plenty of growth ahead of us.
Mike, why do you think now is a good time for investors to take another look at your company?
I think, just in reiterating what we've been able to accomplish in the last 4 quarters, is demonstrated that we have the ability from our management team and the people that we've been able to acquire to integrate them and grow profitably. And so, and with now the recent acquisition of BGR, the burger joint, and soon to be hopefully another burger acquisition as well as organically open 2 more Hooters based on the capital we just recently raised in the rights offering, I think now is the time to get on board to experience the next wave of growth. And I always tell our staff internally, it's a marathon, not a sprint. And this is the early stages of that marathon. So we're really excited, and we have a great team, both at the parent company and most importantly in the international markets.
Great. And on that note, Mike, we'll conclude things.
Thank you very much for having me.
I'd like to thank again our guest, Mike Pruitt, CEO of Chanticleer Holdings. I'm RK Walker. Thanks for joining, and I'll see you again next time.